I think the Southeast Asian market itself has, I guess, been a drag. I mean, Asia remains a really bright spot for emerging markets, but Southeast Asia has been a drag within Asia. And we think it's really due to a couple of factors. One of the factors is, of course, definitely the lack of an AI, I guess, an AI push, an AI accelerant that really helped boost the markets that we saw basically in China and, of course, in Korea and in Taiwan. And the other part is, of course, on Trump's, I guess, the shift in trade policy, because over the last few years has really been China plus one, right? So these countries in ASEAN has benefited from China plus one, whereby they beneficially outsourcing production from China. But now in the regime where potentially it's really universal reciprocal tariffs, this tailwinds kind of becomes a headwind, because in certain sense, a lot of U.S. products, even though it's not these ASEAN imports of quite a fair bit, even though they don't import a lot of U.S. products, but the U.S. products they do import is taxed at a very, very high level. So if it becomes a regime by reciprocal tariffs, the tailwinds that they get from China plus one kind of really gets negated in certain ways. So for us, I think in the way we position in ASEAN, I think we are underway, but overall we continue to be really positive on Indonesia, given its basically its longer term demographic dynamics. And one of the things that we kind of look at is really the problem that's really been, I guess, us that we face in really investing, putting more money to work in ASEAN, is that the liquidity itself has really kind of fallen very sharply, and even for really the key index names, and this makes them kind of more volatile in a certain sense, where limited liquidity and you have big macro news source or big movements on the dollar kind of makes a movement more exaggerated.
Right. I just wanted to pick up on that thing you pointed out, Gary, the reduced liquidity we're seeing in Southeast Asia. Is that because of interest rates and financing conditions continue to remain relatively tight as compared to, say, 5 years ago? Or is it because there's a bit of a wait-and-see approach? Because, as you mentioned, there's still a lot of uncertainty with regards to how tariffs might hit the region. Most countries in Southeast Asia happen to have a trade surplus at varying degrees with the United States as well. Is this really just the markets going, let's wait for the smoke to clear and to see if there are more fires we have to put out before we decide to deploy or to pull more money out?
Yeah, I think it's a combination of the both reasons that you highlighted. And of course, now where AI has kind of been the main driver for Asia. ASEAN really lacks this AI accelerant, and that probably makes us people we wait and see on these tariffs, on improved liquidity conditions. While at the same time, let's us focus on what's really working right now, which is basically AI in North Asia.
Are there any other countries that might be at least that have potential to at least benefit from this AI boom that we're seeing, or this tech boom that you're saying Southeast Asia has lagged behind?
For ASEAN, the bottleneck for compute at this stage, it's still fairly uncertain because of the potential restrictions on chips. Mm-hmm. Then we have the bottleneck on infrastructure, and that itself, it's kind of being resolved. As you can see, a lot of data centers kind of being built up. But one thing ASEAN doesn't face a bottleneck of is on the end users, and therefore you have a very digitalization is very, very prevalent within people's everyday lives. And we have kind of, within ASEAN, we have notions of countries, super apps in countries that are able to basically harness AI information and kind of really monetize them into meaningful revenue streams. So we think that once the first two bottlenecks get more resolved, there's more certainty in the first two bottlenecks, the last part of the AI value chain within ASEAN I think would benefit strongly.